Hey, welcome investors to the 40 Finance channel. Today I'm doing my Super Bowl stock picks for 2022. These are a handful of stocks that I think will get a meaningful benefit from the Super Bowl regardless of who wins or loses the game. And it's a particularly fun Super Bowl for me living in Cincinnati, Ohio. The Bengals rose out of the ashes this year to somehow land in the Super Bowl, and I still can't believe it. Now, I'm a Philadelphia Eagles fan here in Cincinnati, but our family pulls for the Bengals. We go to a couple games a year, and my kids really like the Bengals. And I will be pulling for the hometown to win on Sunday. See if they can get one of these replica Super Bowl rings. I bought one when the Eagles won their Super Bowl, and at least for my youngest son who really likes the Bengals, I'll probably go out and get one for him if they pull off the victory. Now, let's circle back to the stock picks here. Basically, I have three categories of stocks that I think could get a meaningful impact from the Super Bowl, so let's jump in. All right, the first category, and you probably already guessed it, is going to be those online sportsbook companies. There is no bigger event than the Super Bowl when it comes to gambling and the proliferation of online sports books across newly legalized states. It makes for a big opportunity, but the big opportunity comes with a significant cost, and that cost is the battle for new user numbers. And even though only 33% or so of Americans even have access to legalized sports betting in their state, we're already shaping up into a 3 or 4 dog race for this online sportsbook world. My bets are on DraftKings. It's a slightly different stock than I talk about normally on this channel because it is not profitable. And if I didn't already own it, I would probably not invest in it today since the market pullback, just because it is not printing a profit. However, this is a company that I use. Here in Ohio, we don't have online sports books, but we do have daily fantasy sports that you can play, which I've been a big fan of for many years now. So back when they had their SPAC or IPO or whatever during the pandemic, I did buy into DraftKings at that time, and I will be adding just a sliver of shares here heading into the Super Bowl because I just think the momentum for all the stocks in this category is going to be high. Now I'm going to scroll all the way down to this NPR article. The NFL has partnered with 7 sportsbook operators, which allow them to buy in-game ads. You have to buy the in-game ads. The league's top-tier partners, Caesars, DraftKings, and FanDuel, were able to integrate sports betting content into the NFL's website and app. And those companies are spending millions of dollars during and in the lead up to Sunday's Super Bowl. Caesars and DraftKings will air national in-game TV commercials, while FanDuel will run pre-game and local in-game ads, according to Legal Sports Report. All right, so of those 3 names, right off the bat, FanDuel is not listed on an American stock exchange. You can access their parent company, Flutter Entertainment, on the OTC markets, but I'm just going to skip ahead and focus on DraftKings and Caesars. And really between these 2 stocks, it's just a choice between growth prospects and more of a fundamental play. So Caesars by far is the more fundamental play and probably offers the most limits to the downside. This is a company that has physical casinos. They're not all in on just mobile sports books, but they are making a great play there. And using SeekingAlpha, if we go to just their earnings estimates, let me switch to annual here, you can see that December 2021, coming out of the pandemic where a lot of properties were closed, EPS estimate is negative, but you got to start looking ahead to next year and the year after and just cross your fingers that COVID is going to go away. This one has a reasonable forward PE of 117. Be interesting to see what their next earnings report says, and hopefully if they get their physical casinos back up, because that brings in a lot of money with food and beverage, hotel night stays, etc. And that can do a lot to get this stock back on the track from a fundamental standpoint. All right, let's look at the revenue estimates for Caesars. coming in about 9.7 billion for this fiscal year. Next year looks like about a 14% increase. And this is where you're going to see the difference between Caesars and DraftKings from a stock perspective. Again, Caesars holds the fundamental advantage here, but let's switch over to DraftKings and take a look at their growth rates. All right, here we are with DraftKings and SeekingAlpha. By the way, if you're interested in learning more about SeekingAlpha and saving some money on an annual premium subscription, check out my affiliate link in the description. This is a service that I use regularly, pitch a lot here on the show. And if you use my affiliate link below, I earn a couple bucks, you help support the channel, and you save money as well. All right, so on the DraftKings end, there is no profitability in sight. Maybe 2025, it's really hard to tell. This is a user acquisition game. This is not the type of stock that I typically invest in, but because I'm sort of passionate about this industry and I'm very familiar with DraftKings, it's a dart throw for me. It's all about revenue growth, and you can see these numbers down here. If they hit 1.27 billion. We will find that out on February 18th, which I believe is next Friday. If they hit the 1.7 billion, you will have 100% growth from DraftKings year over year. Now, keep in mind that 100% growth is padded because we had a lot of cancellations and weird scheduling conflicts in 2020 with COVID. Looking ahead to maybe a more normalized year, I would say, in 2022, potentially 50% on the revenue increase. And then looking ahead to 2023, strong potential there for 35% growth rate in revenue. Okay, I just want to be clear on this. If you're buying into DraftKings today, like I am, you are buying into user and revenue growth and outlay, right? They're paying today to acquire users and revenue with the goal that in 5 years from now, that will produce a profit. All right, category number 2 that could benefit significantly from Super Bowl exposure is what they're calling the crypto bowl. All right, so Super Bowl advertising will be inundated with crypto advertising. It's very similar to Caesars and DraftKings. This is going to be a time when advertisers are looking to grow their user numbers. So if you have any interest in the crypto space, from a stock perspective. So, right, all the publicly traded exchanges, of which there's only a couple, and then perhaps on the flip side of that, depending on your risk appetite, I bought some more Bitcoin heading into the Super Bowl. I buy very small levels, $100 at a time, but I did buy some Bitcoin, thinking to myself that it's the perfect opportunity for Bitcoin to kind of bounce back a little bit with all this hoopla going around in the Super Bowl. All right, as far as the stocks to watch in this world, not all of these are public, right? So FTX and Crypto.com are private. You cannot buy them on the stock market. Coinbase, of course, you can. And then they go on to say the Rams and the Bengals are playing at SoFi Stadium. So SoFi will probably have some sort of crypto tie-in if you're interested in SoFi stock. And then the last thing they call out here in this article, the point of sale systems at the venue are run by Square, whose parent company is, of course, Block, and they have an emphasis in Bitcoin as well. All right, taking a look at Coinbase on SeekingAlpha. And Coinbase is a weird stock, and I feel like analysts are really struggling to get their hands around what the EPS projections are going to be. This technically is a profitable company that has produced EPS in the past. Let me see what we got here. They're calling it a forward PE of 14.18 on the main page, but when it comes to projecting EPS estimates, there's not a lot in here. In fact, there's nothing in here from SeekingAlpha. Now, on the revenue side, too, another one that's interesting, and you see the negative 4% here for 2022, and for whatever reason, analysts are projecting a stalled growth in revenue for Coinbase, and I've seen it pretty consistently across several websites. So I don't have any color to add on why that would be. If you asked me, Will the crypto markets be bigger this year in 2022 as opposed to last year? I would have guessed yes, but perhaps it's a competition thing. So if you're jumping into Coinbase, I would just go through and make sure you're familiar with the projections that are out there. Now, from a SoFi standpoint, this one has gotten really battered here lately, and analysts are actually pulling back on their projections just because there's some worry about the growth rate. So I'll just say that SoFi is not profitable in its current stretch, and it does not have a projection for EPS profitability. So if you're going to jump in this one at $13, you're really just sort of assuming that even short term that the Super Bowl exposure turns into something and they register a bunch of users. It's really hard to tell. This is not one that I'm interested in currently. Now, heading back here to this crypto Super Bowl article on protocol, it brings me to my third category that not a lot of people are talking about, but that is going to be digital advertising in the connected TV space. So when you think about sports gambling and you think about crypto, which appear to be some of the big players in advertising for this particular Super Bowl, you have a problem if you're in those spaces because you can't just advertise wherever you want. So when we look at this article, tightening rules, Google, Facebook, and Twitter had bans on crypto ads in 2018. Those restrictions were substantially loosened, but the rules put in place still make it difficult for some firms to advertise. Under Facebook's crypto ad policy, most advertisers need prior written permission with some exceptions. Google started allowing some cryptocurrency exchanges and wallets to advertise, but Google then tightened its rules to require FinCEN or chartered bank registration and still doesn't allow ads for DeFi protocols or specific coins. So the unlock here in my brain is it's not super easy, right, to fire up Facebook ads and Google ads for these services, crypto and sports betting. So that opens the door to connected TV, which is, of course, growing by leaps and bounds. So I have to think of names like Trade Desk and another stock that I own called Magnite as potential winners in the Super Bowl. Now, as far as Trade Desk goes, it's the biggest name in digital advertising, at least from a connection point. They're an advertising trading platform that's basically connecting suppliers and advertisers across traditional digital media, but also perhaps more importantly in the connected TV space. Now, Trade Desk certainly trades at a premium for all these services. End of 2021, when we get our earnings report out of them, if they hit 77 cents, you're talking about a PE of 106. Looking ahead for next year, that is supposed to grow about 18%, get you to 92 cents. Forward PE in that case would be 89. Then looking at revenue growth, and this is why you're getting the premium on your EPS, potentially plus 42% revenue this year, plus 30% revenue next year if everything falls in place. And it wouldn't surprise me if these out years, which are in and around the 25%, those will probably go up over time. And if you make this play, you're obviously rooting for outperformance, and Trade Desk is certainly in the right industry for that. All right, last stock pick here in the connected TV space. This is one that I own, Magnite. And this is a little bit of a dart throw, but I'll tell you what the rationale is from my camp. I have a higher cost basis in Magnite, close to $23, $24. Stock has taken an absolute beating over the past 6 or 8 months. So I'm lowering my cost basis here with a small buy of 20, 30 shares. And the rationale here is pretty simple. Magnite's biggest client is Disney. They represent or they resell all the inventory across Disney, Hulu, ESPN in the connected TV space. They also do not have any exposure to the sort of iOS tracking problems that we've seen Facebook run into. The bulk of their business is in connected TV after some acquisitions. And even if it works out that they only get a smaller percentage of all this Super Bowl stuff that's going on in connected TV land, it should still be a boom for Magnite as a company. Looking down at their estimates, these are non-GAAP, but you got 54 cents if they hit it, and that would be 200% growth, gives you a forward P of 25. Next year, if they keep growing, 83 cents, that puts you under 20. Keep in mind, this is a small cap stock, very volatile, limited number of analysts. It's something that I've read about, so I feel okay about it. But you should know, too, that their balance sheet is kind of mixed because they made a lot of acquisitions recently. I don't want to sell this as a moonshot. I think for me, it's much more of a 5-year play. Looking at the revenue side, plus 86%, 2021, plus 30, plus 23. If those numbers materialize in the future, the real key is going to be, can they, continue to keep Disney and Hulu happy, and then, of course, add more people from there. They're probably a couple large partner announcements away from becoming a much bigger player in the industry. We'll have to see if it happens. All right, guys, so those are my Super Bowl stock picks for 2022. Keep in mind, obviously this video is airing on the weekend. You don't need to buy these stocks prior to the Super Bowl to take part in any momentum that they may have got from the game. You just need to keep your eyes on headlines and try to see what sort of feedback. With DraftKings, we have an earnings call coming up on February 18. And then I believe Trade Desk and Magnite are in the last week of February. So what you're looking at with these picks are just stocks that could get a little boost of momentum. Not necessarily change their entire trajectory, but get a little boost of momentum and get things pointed in the right direction in what has been very choppy waters over the last 90 days. Thank you, investors, for watching the video. Please give it a like, subscribe to the channel, all the things. Don't forget to check out that Seeking Alpha special offer in the description. We'll see you on the next video.